I had a client call me earlier this week with some questions about their invoice, and it made me realize that we really didn't do a great job of explaining to them the components of a level funded premium and the breakdown of that. And, that's on us for not really going into the details at the time. It was a very small employer, only about 5 people on the plan. And, the level funded options that they were offered were really the best financial option for them at the time from a premium standpoint, but also from a benefit standpoint. And the plan's been in place for a couple years. So, we totally whiffed on the fact that, we didn't take the time to really sit down and go through what those premiums look like, behind the scenes, not just what they're getting billed each month. So I just wanted to spend a quick moment and go through really the way a level funded premium is broken down. We're using a $300 per employee per month premium here just to keep the math simple. And of course, the way that this $300 is split into three different parts is going to vary depending on what insurance company or what TPA you're using. But this really gets the point across into how that money is broken up. So you pay the $300 a month as the employer. Behind the scenes, the insurance company or the third party administrator is going to split that money into essentially three buckets. The first is your administrative bucket that covers all the administrative costs of the plan. That pays the TPA or the insurance company. It pays the pharmacy benefit manager. It pays the network if there's a network being rented. It pays medical management, care management, virtual care access, customer service. It also pays the broker or advisor or consultant. So that's your administrative costs, and that's going to be one portion of your premium that you see every month. The next is what's called your stop loss insurance. So in a level funded contract, this is the real insurance policy within that contract. And there's two types. There's specific stop loss and aggregate stop loss. Most level funded plans are going to have both of those coverages in there. And you can see in this example, it's another $100 for that type of coverage. And the third bucket is the claims fund. In this example, again, we're just simplifying it, saying each bucket gets $100. The claims fund is where money is spent. So money is being set aside from your premium to pay for claims as your employees use the plan below the specific stop loss or the aggregate stop loss limits on the policy. So that claims fund is going to be funding all of kind of the day-to-day claims for all of your employees until any employee has a major claim or the group as a whole has collectively a lot of claims that add up to a major claim. So just hope that that makes it a little bit simpler for you to understand. Typically, there's three buckets. Companies may call them different names, but your admin and your stop loss are typically your fixed costs. You'll never get that money back. The claims fund is the only portion of your premium that could potentially be recoverable if you did perform better than expected. Hope you learned something new. Hope you have a great day.